Be Wealthy and Smart, episode 1255.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what is going on with interest rates, because bond yields have been rising and the 10-year Treasury yield has reached its highest level. The yield on the 10-year Treasury note rose to 4.714%, which is slightly below the 16-year high reached earlier this week. Senior Fed officials, including the Cleveland Fed President, Loretta Mester, were talking Thursday at the Chicago Payment Symposium, and San Francisco Fed President Mary Daly also spoke yesterday, as well as Richmond Fed President Thomas Barkin spoke in North Carolina yesterday. So we got lots of comments from the Fed, a little bit more about how rates might have to stay higher longer, but it's all data driven. So it all depends on what the unemployment rate looks like and what the inflation rate looks like and what those metrics are showing. Bill Adams, chief economist for Comerica Bank, said financial markets have been rattled in the last few days. The yield on the 10-year Treasury note has jumped about 0.6 percentage points since the beginning of September, extending a steady march higher since the early summer. Now, all eyes are on Friday's jobs report, which will tell us what the unemployment situation looks like. A weekly report on jobless claims data showed no sign that layoffs have been increasing. Rising layoffs are seen as a necessary prerequisite for the Federal Reserve to start easing its monetary policy, but the government data show the number of Americans who applied for unemployment benefits last week rose slightly to 207,000, but remained near pandemic-era lows. Bill Adams of Comerica also said, on net, the increase in long Treasury yields makes the Fed more likely to choose an earlier peak in short-term interest rates and an earlier pivot to rate cuts in 2024. So that's a positive statement that because rates have already gone up, the Fed may not have to raise another 0.25%. And it may even cause them to pivot to reducing rates earlier than expected, even though they're talking up interest rates right now and doing all the jawboning to make interest rates rise at this moment in time. That may be so that they can cut interest rates later. Now, as I said, all eyes are on the jobs report that comes out today. Economists polled by Dow Jones are expecting the U.S. economy to have added 170,000 jobs last month, down from 187,000 the prior month. And the unemployment rate is expected to have fallen to 3.7%, which is below the 3.8% unemployment rate in the previous reading. And many people are looking to a softer jobs report as something that will bring down bond yields. Joe Terranova, senior managing director at Virtus Investment Partners, said, one way or another, tomorrow's jobs report is going to have a significant impact on which way the market is going to move, because right now, we are moving in such a volatile nature in fixed income, and that's an uncomfortable place for investors to be in. Yeah, the stock market doesn't like it when the bond market's interest rates are rising. The stock investors prefer for interest rates to be falling. And should the data today come in worse than expected, we may see those interest rates drop. And that would be a welcome change for the stock market and could be the catalyst that will kick off the bull market that I'm expecting to start any time now. We're right around the corner from a major bull market starting. So even though it feels bumpy and uncomfortable, just hang in there. We're going to get through this, and then it's going to be off to the races. It's much more likely from here that interest rates will start to decline, and if the economic information is weak enough, that may convince markets that the Fed is done raising interest rates, which is exactly the kind of information we're looking for. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all my podcasts are on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.